Good morning, MegaWhale team, and welcome back to another video. Bitcoin has finally broken through on the daily chart that major point of resistance at 117.5 to 118,000. In today's video, we are going to be discussing the significance of this breakout, potential targets for Bitcoin, whether or not the 4-year cycle 6th of October top date will come to fruition, and how the short-term price action is developing. Are we going to see pullbacks? What could that look like? What are the maximum targets we could expect following this breakout, and everything else in between? Now go ahead and comment down below if you think Bitcoin will create a new top by the 6th of October, which is just in 4 days as per the 1064-day bar theory. We'll of course be discussing that in today's video for those who do not know what it is. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. That is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. Go ahead and check it out by the pinned comment down below. Let's jump into the content. So as we can see, guys, a lot is happening for Bitcoin. We have broken through a very important resistance. This resistance being a prior lower high, a point of resistance we have now maintained underneath since the 22nd of August, so a little bit over 4 to 5 weeks, and we have just broken through as we are speaking on the daily chart, actually closing this daily candle in 20 seconds. This is a pretty big breakout because number one, it signifies to us a structural shift in the trend, telling us that the buyers are actually fully back in control here. But number two, it opens up the potential for Bitcoin to move into this low historical resistance range as per the VRPV, potentially taking us back into these prior all-time highs and even potentially creating a new all-time high if the price is able to maintain. So a very, very big move here for Bitcoin, and a move of incredible significance. We'll be discussing this in massive detail today. Let's start on our market data. 24-hour volume and liquidations. Let's jump into that. Taking a look at volume, volume is pushing up a little bit. We're up 12%, 304 billion over here. Liquidations up around 64%, 621 million. Of that, a lot of that is coming from short positions, around about 391 million coming from shorts. Taking a look at the breakdown, Ethereum and Bitcoin really leading the way here for liquidations for shorts, as of course both those markers push aggressively upward. Taking a look at the DXY, taking a look at the S&P 500, starting on the DXY. Not too much happening for the DXY. It is more or less just chopping sideways again, waiting for that job data, waiting for interest rates. Of course, we do have NFP data coming out in a little bit over 24 hours now. I'm not too sure if the government shutdown in America is going to impact this. I've heard that it will impact, it will delay that news result. Something I need to read up a little bit more about. Again, I just woke up, so I haven't really read too deeply into that. I'm sure a lot of American viewers have probably been reading up on it, so go ahead and leave a comment down below what you think of the government shutdown, what it'll amount to, how it will impact the market, etc., etc. I'll look into it after I make today's video. But of course, NFP data is generally quite a volatile event. It does trigger a fair bit of movement in the market, as it is a strong leading indicator for inflation and thus probabilities for future interest rate cuts. Moving over to the S&P 500. The S&P 500 is actually pushed back up over here, breaking over its local high, creating a break of structure, a good sign for the S&P 500 if this daily can maintain. Of course, we are expecting this overall trend to continue. As we've been saying, the trend is very much still positive. While we remain above this diagonal uptrend, we're only really looking for higher time frame corrections for the S&P 500 if this uptrend breaks. So when this uptrend breaks, it will break at some point. When it does break, we then turn bearish and we expect corrections into that sell side liquidity. Until then, all we're going to see these short-term pullbacks, potentially bounces, but we're watching for breaks over prior highs, because the breaks over these prior highs will be trigger points for continuation. So target-wise for the S&P 500, provided we can maintain here above this break of structure. We're looking 6,800, we're looking 6,900, watching these psychological levels for the market. Let's jump over, guys, to Bitcoin. We have a heap to be taking a look at today. As we mentioned, we're going to be taking a look at the short term. We're mostly going to be talking about this daily breakout. What are our targets? What impact will this have? We're also going to be taking a look at the 4-year cycle, the 1,064-day bar theory, what this means for the market. Will we actually break this cycle, right? Are we going to see the top after the 1,064-day bar theory, the 6th of October? If so, the 4-year cycle potentially starts to break a little bit. Will we see it happen on the 6th of October, right? We have 4 days for Bitcoin to rally a little bit over 6%. It is definitely possible. So we're taking a look at that as well. Before we get into it, make sure to go ahead and sign up to BitGet, BitUnix, and BingX. The links down below. You'll get a lifetime trading fee discount of 15% off all your trading fees. You'll go to support me making this content. And of course, you'll support yourself trading on exchanges I use and I trust. We'll play an ad and we'll jump right back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other 2 exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's jump back into it. Now, I want to start by taking a look at the 1,064-day bar theory. This is a theory that has been circulating for a long time for the 4-year cycle. What it goes to show is it goes to show roughly from the bottom or the end of the bear market phase, which has generally been around the 12-month phase after the top, we have seen around 1,064 days from that exact bottom to the next all-time high at the end of the bull run phase of the 4-year cycle. Now, this has played out 2 prior times. 1,064-day bar theory has played out twice, and it does have the potential to play out again. So that is in essence what the 1,064-day bar theory is. It's simply a date range trend which suggests from the exact bottom, we see 1,064 days until the end of the bull run all-time high, the bull run top, whatever you want to call it. Now, historically, it has played out, and it does have the potential to play out again. If we're taking a look at Bitcoin in terms of the 6th of October, that is going to be this green vertical line I've gone ahead and put on the chart. If we're taking a look at what we would need to see for Bitcoin to validate the 1,064-day bar theory and create an all-time high exactly as the 4-year cycle projects, we would need to see from today, we would need to see a rally of around 4.7% or greater. Because we don't need to create an all-time high by $100, it can just be 20 cents. It just needs to be over that prior high to technically create an all-time high. So, do you think Bitcoin is going to rally 4.7% plus in the next 4 days? It definitely is possible to see that kind of movement. In fact, if we just look at yesterday's candle, that candle alone was around 4%. So we definitely have the potential to do that. We'll talk about in terms of probabilities in just a second, but that is definitely a possibility. So the 4-year cycle might actually come in clutch last minute and revive itself from the dead and push back up to validate that 1,064-day bar theory on the 6th of October. It's going to be a very interesting week. I'm actually super excited to see how this plays out. It's just like one of the most exciting things that has happened for a while in the market, to just see this volume come back in at the start of October for the weekly close, see the market push up in anticipation of the 1,064-day October 6th top. It's going to be very interesting to see how that plays. So we'll talk about that as it happens. But I want to see what you guys think. Do you think we're going to see the 1,064-day bar theory validate? Do you think we're going to break it? Do you think we'll continue upwards past it, breaking the 4-year cycle? Do you think that it will be the top and we're just going to come back down immediately from there? Let me know what you think down below. Let's jump into the rest of today's analysis. So taking a look at the total cryptocurrency and altcoin market cap first, and we'll come back to Bitcoin's breakout in a second. So first and foremost, guys, the total cryptocurrency market cap. As I've said for a while, the total cryptocurrency market cap is still looking relatively decent, right? The reason why it looks decent now is looking really strong is because we've been sitting above that critical point of support at 3.65 trillion. This was the major line in the sand, essentially that major point of support where if we were to have broken down, we would have entered a macro correction. That was the deciding point for the entire cryptocurrency market to define whether or not the macro was still bullish or the macro was still bearish, and we were able to maintain above that level perfectly, now bouncing over the last 3 days, pushing up just over 4 trillion again. Now, we do have some small risks. If we take a look at the RSI, that is still downtrending, but we have actually just broken our head over that downtrend in the RSI, signifying that this exhaustion, which has been developing through this period of price action over the last 2 months, is beginning to be absorbed by the buyers, which is a good sign telling us the market may be prepared for that next leg up. Now, if that does happen, there is a potential that leg up could actually continue through the next 4 days and through the 6th of October, potentially invalidating the 4-year cycle and resulting in a longer continuation, a longer bull run. That is definitely something that is possible. So taking a look at the total, we'll come back to our initial point that we've been saying for a while now. Provided we remain above 3.65 trillion, the macro for the total cryptocurrency market cap is still looking good. If we lose this level, we expect higher time frame corrections. Until then, that is the point we need to remain above. If we remain above here, the potential for continuations upwards is still in play. Moving over to the altcoin market, of course, Bitcoin is going to heavily determine where this goes, especially with Bitcoin dominance now pushing back upwards. We'll talk about that in a second. The altcoin market is looking okay. Again, we do have some key levels we want to see broken. If we're looking at the good things, number one, we did see a rejection from that point. Of course, we did see the 2021 high and the 2024 high act as a temporary resistance. We saw a pretty considerable drop over here, pushing down around 12% for the altcoin market with a retest with negative momentum, decreasing the potential for a breakout. But since then, we were able to come back and retest this $1.5 trillion level. As you know, we were discussing this level as a key bullish point a couple months back. We were talking about how we were really unable to close weekly candles above that level. We finally closed the weekly candle above. We saw a continuation upwards. So prior resistance becomes future support. We have bounced from this level. So again, just as a total cryptocurrency market cap is macro bullish above that 3.65, the same goes to the altcoin market. Provided we can hold this support, there is chances we see continuations upwards. And again, if we are able to break through this high, it is highly likely we see not only just a 4-day continuation, but we see potentially a multi-week to even a multi-month continuation for the rest of the market, invalidating the 4-year cycle. So those are things we need to consider over here for these markets. It's good to look at these structural levels. But either way, guys, the line in the sand, 1.03 to 1.05 trillion for invalidations, and for triggers for continuations, we're watching 1.16 and 1.13. When we break those levels, we will likely see rotations occur back into altcoins and Bitcoin dominance come down a little bit. Let's jump over to Bitcoin. So taking a look at Bitcoin, guys, there's a few things happening here, and we did talk about the 6th of October potential top. The 4-year cycle has been telling us, 6th of October for quite some time. You can go back to our videos. We're talking videos way back in even way back in the end of November 2022, we're talking January 2023. The 6th of October was always a very important level. And as we've been approaching that, we've told you guys, maybe the 6th of October might not be the top, right? Maybe we continue through the 6th of October. Maybe we top before. Maybe we don't reach there again, right? Maybe the top's already in. No matter what really happens, the 6th of October is still going to be a very important date. The reason being is because everyone thinks it's going to be. And when everyone thinks it's going to be, we're generally going to see a lot of volatility. We're going to see a lot of reactionary price action into, after, and around this date. So I do expect this week to be quite volatile. And if we look at how the weekly candle closed, for example, we saw just at the end of that week, we saw a massive push upwards into that close. That was a very strong sign to us that if we're looking at things like market perspective, if we're looking at things like market tone, and we look at the large players in the market who try to push the market in directions of which they want to, they definitely try to manage market tone and market perception to influence buyers moving into the new week. A lot of trading algorithms use weekly open prices as part of their projection models to then map out how they will plan their trades throughout the rest of the week. And we have seen a strong weekly close, which alluded to us that we're going to see some strong moves during this week, which we are seeing play out currently. Now, when we're looking at the horizontal levels, I want to start by looking at the horizontal levels of Bitcoin. The key horizontal level we need to maintain above to remain bullish here is very simply this level of support, 117 to 117.5, 118. Very simple, 117 to 118. That is the point we need to maintain above the support. We can definitely come back down to retest. Totally fine if we retest it, but we need to remain above this level on the daily chart. If we close a daily below, particularly below 117, this may turn into a deviation from the range and we will likely see continuations back to the low. Worst case scenario. Best case scenario, we maintain above this level, we enter this low historical resistance range. This is what we call a low historical resistance range, a LHRR. If you guys follow the channel, you would know we use this a lot in our trading. It is simply a vertical range, okay? A vertical range of horizontal price action where the horizontal trading volume has been significantly lower or is decreasing in the direction of the trend, meaning bullish volatility will likely increase as the price action pushes upwards, and the volume requirements for the price action to push upwards decreases at the same time. So it was a perfect storm that facilitates strong directional trends. If we are able to maintain above this level, this ends at around 124,000, which is the buy side liquidity, meaning provided we remain above this level, we could see continuations up to 124 and into new all-time highs. The question is, are we going to see it happen by the 6th of October, or are we going to see it after? Because although that doesn't really matter, it also matters in terms of the 4-year cycle. So it doesn't really matter too much in terms of trading, right? Because you're not really making trading decisions based on that. It's not really actionable information. But from an analytical perspective, from a trend-based perspective, we're looking at the 4-year cycle and historical price projection perspective, it is kind of important, right? That a 4-year cycle does maintain. If we're taking a look again over here, guys, at some structures, we did have a potential breakout over here out of this symmetrical triangle formation. A symmetrical triangle formation is simply a period of sideways price action where we have consecutive lower highs, okay, and higher lows developing. So we have a period of sideways. This is generally going to be a neutral consolidation, initially in a downtrend, and an uptrend, and a downtrend, and then we have the breakout. It generally suggests, again, a period of decreasing volatility, which then consolidates and results in a compression move, generally upward or downward, depending on, of course, the direction of entry. So when we see a directional entry in, the directional expectation is up. When we see a directional entry down, the directional expectation is down. Generally, not always, just generally. So when we're looking at the measured move for something like this, we can take a look at number one. We can take a look at the depth of this. We take a look at the 0.1 to 0.2 depth. So that is going to be here, applied to the breakout. You can see already that is taking us into a new all-time high. So it's telling us, what it's telling us is telling us we've seen a breakout of resistance. This breakout of resistance has facilitated the buyers to regain control massively here on the weekly chart and the daily chart. We're pushing into a low historical resistance range where bullish volatility may dramatically increase, and we're pushing into a very important date, which is the 6th of October. All of this tells us we could see continuations in new highs over here as long as we can hold this support. Because if we fail to hold that support, we push back down into these lows. That is going to not only be a failed rally back up into new highs, but it is going to be the invalidation of the 6th of October top, and it will tell us that we had an early top for the 4-year cycle. That is something we need to pay attention to. I think that is going to be it, guys. I think we'll wrap it up here. I think maybe I'll touch on one more thing. I think a lot of people are probably wondering how the indicators are looking. So let's take a look on the daily over here and the weekly. Let's just scurry through a couple of indicators. Taking a look at the weekly bull market support band, starting off, we can see the weekly bull market support band has held. Fantastic to see. Again, a good indication of the overall higher time frame trend that is held as support. Good to see. We're taking a look at something like the 3-day chart. Again, the 3-day chart, the 50 EMA has been a fantastic indicator. We are watching that 50 EMA as support. Again, whenever that level is lost, that is going to be a continuation downward trigger. While we hold above here, rallies back upwards is very much possible. So 50 EMA is held as support, a good sign. We're taking a look at things like the Gaussian channel. On the daily chart, we can see we've actually broken to the upside here of the Gaussian channel. Something to pay a little bit of attention over here. It is better on the weekly charts regardless. The weekly chart Gaussian channel is very much still holding as support. So those are a few indicators we are watching and some good signs on those indicators as a matter of fact. So thank you for tuning in, guys. Have a fantastic rest of your day. I think the 6th of October, what day does that lay on? Let's take a look at what day that lays on. That lays on a Monday. That's really good because we do videos on Mondays. So we will see you guys tomorrow, and then we'll see you guys on Sunday, and then we'll see you guys on Monday, and that'll be the 6th of October top. So look forward to talking about the rest of the market with you guys. Have a fantastic rest of your day. This is very exciting. I don't want you guys to downplay it. This is very exciting. This is very important. This breakout has been a point of resistance now for quite some time. We've seen major rejections from this breakdown. We've seen some potential massive warning signs flash. If we're looking at what needs to happen again for the next leg down, we'll keep saying this, for the next leg down to trigger, we need 3 things. 34.34 daily RSI needs to break, 107 needs to be lost, and of course the 3-day 50 EMA needs to be lost. Until that happens, the next leg down won't occur. We need to see that for the next leg down. Until then, the buyers are stepping in. We're seeing some breakouts. We're seeing some real strong bullish momentum. We're seeing pushes into low historical resistance ranges. We're seeing breakouts on weekly charts. It's looking pretty decent. So watching 118 today specifically, the reason why today is going to be very important is we've literally just seen that daily candle close above. So now we're watching to see, is there going to be enough demand today to actually maintain the price above this level? Because again, although timeframes don't matter too much, they do tell us how long the price is able to maintain above the level. And the longer the price can maintain above the level, the longer time there is for these orders to come in and set themselves below the market price to build up support. So that is why time frame is important, because we see the longer the price is held above the level, the more likely it is going to hold above that level. And so watching very closely, guys. Thank you for tuning in. Have a fantastic rest of your day. We'll catch you guys in tomorrow's video. See you then.